I don't have a ton of time to make today's video, so this is gonna be quick and dirty. Today we had a big fat red day, and if you've been following my channel, you know that I'm waiting for a series of $2 red candles to form a vertical run down to complete a V-type or a V-top pattern. And today we did have a big drop, as you can see, somewhere around the $2 range with a low of $7.20 and a high of $19.01. We're coming in real close to that $2. Big red day. This is what the beginning of a vertical rundown would look like. However, it's probably not going to shape out that way just because that'd be way too convenient for me to be totally right. I did hold some puts from yesterday. This green candle did throw me for a loop, and so that was hard because, well, the puts I was playing turned red, and I was busy in the late part of the day, and so I was unable to really come up with a strategy or deal with the situation. So I decided to hold those puts because we've had this reoccurring pattern of drops and swoops in the price, and you can see that. It's these big tall candles going down and then these weird funny candles with either big tails or big wicks. And today we did have a big dump, just following that same pattern. So I did luck out there, and I was able to offset my losses from yesterday. I had well, $26 of gains today, and then my trades yesterday were my max loss is $24 because I have a $12 put that I bought on Monday, which is still open and I haven't closed that yet. But also I was able to hold one of those puts and sell it today and only actualize a $12 loss instead of a $40 loss. So I'm really proud of myself for managing those losses. It really was a best case scenario for me. I decided to trust the trend and my analysis, and that is paying off. We see the RSI has now flexed downward. You can see that right there, little turn, boop, that's super bearish. But now the RSI is dropping, and after a move up below the 45 level, which is really bearish. Volume today was nothing spectacular. You can see that. Let me make it a little taller. It was more than yesterday, still below that 30 period average, but we're still at a good relative level of volume. The implied volatility continues to drop, which makes me sad. I want to see this implied volatility go up as the price drops. I'm not sure at what point that will occur. I used to think it would be somewhere in the high teens, but I'm thinking now it's probably going to be more towards that 1290 level, that low, where this V starts. The theory is that this V top is going to complete itself, and we've already completed one of these patterns. I do follow fractals. You can see this is the first V top, or the second V top, I should say. It's smaller. It started at that consolidation period that was halfway up that initial run, and that target's been met. And I thought today what we would see is a rise to that price target, 1987, and then it turned down. And the price did actually gap up, and I mentioned it might yesterday. And the price failed to continue to rise to that level, which was super bearish. And I do have after hours turned on. I'm gonna go ahead and turn that off. I don't like to chart with after hours on. It's really not meaningful data, and it messes up all my trend lines. So boom, it's gone. Right, so let's have a look a little closer. I thought we'd see this rally continue up before dropping down, but it just decided to drop down, which is totally fine with me because I am playing the downtrend on the second half of this V top. Volume was pretty high in that 15-minute period towards the close as the RSI was swooping higher off of 30. On the 15-minute chart, we haven't really seen oversold since April 7th. That tells me that there's probably more downside to come. I don't think that we saw a reversal today. At the end of the day today, you can see here there was a nice little bounce. However, I am not super optimistic about that shaping out into a run tomorrow at all. I am still waiting for more downside. I'm gonna go ahead and pull up my 1-minute chart with all my drawings on it. Like, oh my goodness, that's so many lines. So let's walk through it. Yesterday, I opened up a couple of puts really early, and the price ran up, which sucked. And because of this long sideways grind, my contracts lost a lot of value. And then the price rose in the latter half of the day. So this was a very difficult situation for me. And there's a lot of lines in here, just ignore them for now. I'm gonna walk through what was going on today. First thing I'm going to do is increase this volume trend line to show that it was going through a day. The longer trend lines I usually have longer dashes on, and the shorter trend lines are shorter dashes. So today we started with just a dump down, and we immediately broke the uptrend that we found from yesterday's low at this 1770 level. And the price bounced, tested that trend line again, and rejected. And when this new low came in, this was the signal right here that the price was gonna break out to the downside. And there's a really clever way to measure trendline targets. You take the height of the pattern at the most distant point from the trend line, and you measure that height. like right there, okay? And then what we're gonna do is we're gonna take that height and we're gonna apply it to the breakout price, which was right here. And sure enough, when I zoom in, you're gonna see that was the breakout. This was that height right there. This was an important level. The $17.93 or the $18 level was where that run stopped and the bounce occurred. Very good stuff. Very technical, very clean. As the price broke down, recovered, and confirmed a new low, it moved down further. And during this corrective phase before that lower move, I entered into a couple more puts. And they're trash puts because they expire on the 14th. I bought one for 80 and bought one for 12. And these did really well. So I ended up selling them after that second leg because I saw this as a measured move down, and it was, and I sold right at the bottom of that measured move down, right there. And I'm glad I did, because typically these periods of sideways action, these are bad for contracts that are out of the money. And I think both of these were at that time, except for the 18. The 1650 certainly was. So 1, 2, 3. You can see those 3 lines. Measured move down. My entire theory right now is that this is the fractal that's playing out. It's just a simple 1, 2, 3 movement, and it's just obliterating the price of AMC. So after this fall, we did have a new supportive trend come into play here, and this should be a thin dashed line. I did see that a pennant shaped up here. It's in yellow. These are yellow because they aren't really trend lines. It's not really a trend line. It's a pennant formation, like an upward. It's a level of resistance. And the price did set a couple of highs here, kind of like a double peak, and then it fell. And boy, did it just start falling. And what was really interesting is watching the overall downtrend change. So yesterday, I was worried about bullish reversal, and that's because these 2 trend lines were taken out. I'm going to zoom out a little bit, and the text is going to make this a little cluttered, but I think it's going to be okay. You're going to see what I'm talking about nonetheless. There's this red line going through here. This was the primary downtrend, and the price did break above it yesterday. And so I was worried that today we would see a bullish reversal, but what we actually saw is that the price is following that channel downward. And it didn't quite recover it, but you can see it's trying to. And it's almost like, I'm just gonna steal this line here. This line's drawn at the same angle, okay? And if I just move it over, you can see it's almost as if this channel just got wider. It didn't really break. It just got a little bigger, which means the potential downside that could be found is greater too. And I think if we do that trendline analysis breakout, that rough breakout, you know, the price reached all the way up here to about $19, okay? And that gives us a height of about $1.60. So should we recover that downward trend and find a new low off of that, I mean, the price target for that is going to be really low, like $14 or $12. So I'll be watching for that, the recovery of this trend line, and it's very possible that the price will find it and dump from there. But nonetheless, today we had just a dump and a couple of corrective phases, one here and then one here. And I ended up exiting one of the puts that I bought on Monday at the very end of the day. And this is something I want to talk about. This is why trash puts are trash. Down here at 1720, the trash put, the April 14, 7050 put that I bought on Monday was worth, I think, 33 cents. It was actually green for a couple of minutes down here. And then at this peak here, it was already, you know, my position had depreciated 10% or $10, which is over 10%. All right. And that was a really short range, 1720 to 1740, 20 cents, because it was a 1750 put. It was so close to that strike. Nonetheless, I did manage to reduce my losses, which was good, but I just wanted to bring up that 20-cent range can make a lot of difference in the value of a trash put. So, or, you know, just any contract that's expiring within 2 days. So these little moves become very, very important. Nonetheless, I do want to look at after hours, even though I really don't care much for it. Sometimes it can be somewhat indicative of what's going on. There's nothing going on here. So that's what I have for today. I entered some puts, I sold them, made some money quick and dirty on the second leg of a measured move down. I managed to sell some of the puts I bought on Monday, or one of the puts I bought on Monday, for less of a loss, a very, very, very much less of a loss. That sounds dumb, but that's the way I'm looking at it. I am basically neutral for the week. Best case scenario is that I get some money back from the $15 put, which is deeply out of the money still. And, you know, Monday and Tuesday are a wash, and I'm all set up. I got most of my money through clearing, so I'm ready to make a big play tomorrow if we see more continued downside. Go back, watch my other videos. This is all the price action has been very easy to forecast, with the exception of yesterday. Just had a little longer of a swoop. That's what I have. Happy trading.